Pesticides Limited Q2 and H1FY24 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vatsal Vinci from Choice India. Thank you, and over to you, sir.
Hello. Thank you, Sagar. Good afternoon, everyone. On behalf of Choice Equity Broking, welcome to the Q2 and H1 FY24 post-results conference call of India Pesticides Limited. I also take this opportunity to welcome the senior management team. On today's call, we have with us Mr. Anand Swarup Agarwal, Chairman, Mr. D.K. Jain, CEO, and Mr. S.P. Gupta, CFO. Kindly refer to the safe harbor statement on the second last slide of the earnings presentation. I will now invite the management for their opening remarks to be followed by Q&A. Thank you, and over to you, sir.
Thank you, Mr. Bhattacharya. Good afternoon, ladies and gentlemen. I hope you and your family are staying safe and healthy. Wishing you a very Dhanteras and happy Diwali. I take the pleasure of welcoming you all for the Q2 and H1 FY24 earnings conference call of India Pesticides. I hope you all had the chance to look at the financial statements and earning presentation uploaded on the exchanges and our website. In Q2 FY24, agro industries continue to face the headwinds in terms of high-cost inventories, destocking in international markets, and ongoing price declines resulting from an oversupply of raw materials from China, which impacted our exports. Despite these headwinds, our company remains steadfast in the commitment and delivered sustainable revenue of rupees 206 crore, driven by robust domestic demand and relentless focus on operational efficiency. Our expansion project through our subsidiary remains on track and is anticipated to be commissioned by the end of this fiscal year. Additionally, we are proactively investing in new products and expanding our manufacturing capabilities at our existing facilities. During the quarter, we have acquired land adjacent to our Sandila plant, which will be significantly facilitate our expansion efforts for future operational endeavors. We are delighted to announce our plans to incorporate an additional block for intermediate and another for technical by H2FY24. As part of this expansion, we will be augmenting our production capacity by 2,000 metric tons, expected to be complete by Q4 FY24. This positive momentum has encouraged us to explore new avenues for growth and expansion, reinforcing our commitment to enhancing our offerings and achieving long-term success in the agro industries. India Pesticides is an R&D-driven agrochemical business with a growing formulation business. Since its inception, IPL has also branched out their manufacturing capacities in herbicide, fungicide, technicals, and active pharmaceutical ingredients. The technical segment contributes to 77% of IPL's total revenue, is expected to grow in future. There are 90 technicals losing their patents, giving rise to an opportunity for all market players. The total of 19 technicals that go off patent will bring about an increased value of $4.2 billion to all the market players. RPL is well positioned to capitalize on this opportunity because of its extensive R&D facilities that constantly streamline process and research and adding new products to the portfolio. RPL is closely looking at these molecules. Currently, IPL has a total installed capacity of 26,000 metric ton per annum. The total capacity is expected to double with additional block in Sadina and plant in Habibpur. This expansion is planned in line with expected growth in current product as well as new technicals that the company is working on. On the expanded capacity of 2,000 metric tons will be operational by FY24. Our unwavering commitment and accountability combined with our extensive outreach to billions of farmers, a vast distribution network and a strong market presence is instrumental in driving us towards achieving our goal. Now I will hand over the further presentation to Mr. P.K. Jain. Thank you very much.
Thank you, sir. Good afternoon, ladies and gentlemen. We welcome you all for the Q2 and H1 FY24 earnings conference call of India Pesticides. As you all know, the agrochemical industry is passing through difficult times in terms of prices and volumes because of various reasons like oversupply, weather conditions, and geopolitical situations. In Q2 FY24, despite several headwinds from industry, your company has delivered a reasonable revenue of 206 crores on the back of strong efforts by the team. Our ability to navigate current industry challenges is a testament to our dedicated marketing and R&D team. Their relentless pursuit and innovation has allowed us to maintain our competitive edge in the market. This has not only helped us in adapting the changing market conditions, but also in anticipating and meeting the evolving needs of our customers. Now moving on to some strategic development during the quarter. I am pleased to share a significant development in our leadership team. As a part of our strategic succession plan, we proudly welcome the sons of our esteemed chairman, Mr. Vishal Sarup Agrawal and Mr. Vishwas Sarup Agrawal, who have joined our board as non-executive directors. This marks a momentous occasion for us, igniting the path towards an exciting leap into the future of exponential growth. Their vast experience will bring fresh perspectives and energy and will complement the experience and vision of our team, ensuring a seamless transition and a bright future for India Pesticides Limited. Furthermore, we are planning to increase our present installed capacity of technical and intermediate products by about 2,000 metric tons as stated by our chairman, taking our total count to 26,200 metric tons. This expansion is expected to be completed by Q4 FY24. This capacity increase will enable us to better serve our customers and capitalize on the growing demand of our products. In addition to the capacity expansion, we have taken a significant step towards facilitating our expansion efforts by acquiring a land adjacent to our Sandila plant. This strategic move not only provides us with room for further growth, but also enhances our operational efficiency. To update on our Habibpur expansion projects, we wish to inform that the work on the first block is in progress and we are expecting the initial production to be commissioned by end of this fiscal year. This will further fuel our future growth. All our CapEx plans are in progressing as planned, and it will further strengthen the company's capacities and capabilities for coming years. As we grow, our commitment towards bringing chemicals which can substitute and limit our dependence on imports remains steadfast. This is also one of the many initiatives that aligns with the company's vision of Make in India and Vocal for Local to support domestic growth. We deeply appreciate the trust and unwavering support we have received from our valued customers, dedicated employees, trusted partners, and committed shareholders as we embark on our journey towards a more sustainable future. We remain determined in our commitment to deliver value to each one of them. As we move forward, our primary focus remains on attaining market leadership in agro solution sector in India. We are fully dedicated to achieving this goal by evolving responsibly and with our strategic priorities. I once again thank you for your patience and wish you and your family a very happy Deepavali. May this festival of light bring peace, harmony and prosperity in the world. With this, I would like to pass on to Mr. S.P. Gupta to walk us through our Q2 and H1 FY24 financial highlights. Mr. S.P. Gupta.
Thank you, sir. Good afternoon, ladies and gentlemen, and thank you for joining the India Pesticides conference call to discuss Q2 and FY24 results. I will quickly walk through our financial performance. Total revenue for Q2 FY24 was 206 crore as compared to rupees 253 crore in Q2 FY23 due to decline in export sales. In Q2 FY23, we registered an EBITDA of rupees 31 crore, a sequential growth of 19% with EBITDA margin of 15%. The net profit for the quarter stood at rupees 20 crore with PAT margin of 9.5%. Some of the raw materials and finished goods price have reduced substantially. This has led to stock revaluation as per accounting standard and impacted the gross profit and profitability to the tune of rupees 22 crore during H1 FY24. In Q2 FY24, our revenue from export stood at rupees 62 crore as compared to rupees 122 crore in Q2 FY23. And domestic revenue stood at rupees 140 crore as compared to 128 crore in Q2 FY23. Revenue from technicals and formulation stood at 115 crore and rupees 87 crore respectively. Demand environment in international market remained weak amidst high channel inventory and easing supply from China. We have spent 30 crore on capex in first half of the year. Capex outflow of rupees 50 crore has been planned for FY24 for IPL and rupees 60 crore for Salvage Specialties Limited, wholly owned subsidiary. I am glad to share that currently we are in the initial planning stages of launching a new subsidiary that will operate under an asset-light business mode. The company will identify molecules, preparing dossiers, seeking registrations, marketing and distribution of formulations and technical, mainly in overseas markets. India Pesticides Limited has a strong balance sheet with the ability to generate good free cash flow. Company is planning to fuel its capex plan with internal accruals. Our cash and cash equivalent at the end of Q2 was 168 crore. We remain confident of continuing our growth trajectory while extending full support to our customers, suppliers, and valued stakeholders. Wishing you and your family a very happy and prosperous Deepavali. With this, we would be happy to take your questions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, please press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Atul Tandaria from Econ Healthy Foods India Private Limited. Please go ahead.
Yeah. So, wishing you everyone very happy Diwali and happy Dhanteras. My question to our chairman, Mr. RNG. What are the growth plans with respect to coming 2-3 years? And as you mentioned that we are expecting our capacity to go double. So is there any timeline? Thank you.
One thing I can tell you that we can't give you at this moment any concrete time frame But our team and we are quite hopeful that in the coming 2-3 years, we are going to do wonders. I can say only one thing.
Thank you, sir. Thank you.
Thank you. A reminder to participants, if you wish to join the question queue, you may press star and 1 now. The next question is from the line of Harsh Beria, who's an individual investor. Please go ahead.
Hello, sir. Thanks for the opportunity. My first question is about our key molecule, prosulfocarb. So what's the inventory situation in our end markets like? And are we seeing incremental competition coming in this product?
Inventory?
As far as we cannot give you a specific inventory for a particular product, but what is happening in the herbicide you have named, there is a high level of inventory in user countries and a de-stocking by MNCs are going on, so volumes are declined.
Okay. My second question is about our earlier comment on creating a new subsidiary, which will be, which I understood, if I understood correctly, it will be a marketing company. Is that a correct understanding? Will this be a business model like Sharda Cropchem that we are planning to establish?
This new subsidiary, what we are planning, because we are also working on that, but that will be concentrating more on registering the products in each of the countries abroad, along with the formulations. Presently, we are not registering our formulated products in the market, so that subsidiary will concentrate on that so that we can do B2B as well as B2C business. So we are inspired by Sharda Cropchem, but it will be on the similar lines.
So, if I understand correctly, the manufacturing of technical will be still done by us, and we'll be selling both to B2B and B2C customers the end formulations.
Sir, presently we are manufacturing lot of products, but this company will not only focus on these products only, but they can also source it from outside. Because then the product basket would increase.
Okay. And sir, what's the reason for doing this? Because formulation registration is much more expensive process, especially if we are going into regulated markets like Europe or Latin America. So what's the idea behind this?
No, but sir, if you register once, initially it takes little more time, but if you register once, then the business is assured. So that is how, because anyhow, whenever we want to sell, we want to increase our overall portfolio and revenues, then we need to register and increase our product portfolio.
Okay, sir. And my next question is about our domestic formulations business, which has been doing very well for us. Can you talk a little bit about the distribution network that we have set up in India and our plans for this business?
Now, our formulation business is growing every year, and we are increasing the number of distributors. Presently, we have almost about 5,000 distributors across pan-India, and we are increasing our presence in some of the states where we are not present. So like that, we are trying to increase our presence across all the Indian states.
And do we also have our own 9(3) products in filing for Indian market?
9(3) in the sense, what do you mean by 9(3)? Because sir, for our export molecules, we require 9(3) registrations. And for import, if you want to do a new product to import, that takes a lot of time, at least 4-5 years for data generation and registration.
Okay, so currently we are not in licensing new products for selling them in the formulation market in India.
No, presently we are not doing that. We are looking at the good opportunities, because some of the products what we manufacture ourselves exclusively for export, they also have very good market possibilities in India. So we are trying to develop the data on these molecules so that we can start selling them in India also.
Okay, sir. And can you give just a brief commentary about what's the outlook in the technical market globally? Are we seeing improved offtake by the market, or is the situation really bad even now?
Sir, presently, as Mr. Gupta has already told you, there has been an overstocking of the products during the last 2 years because there were serious problems in the container movements and COVID and geopolitical situations. So companies have bought more, and they are now destocking these products. So probably this will continue for another quarter or so, or 2 quarters. Then I think it should get stabilized and normalized. Overall, the consumption of agrochemicals have to increase. In the world, the agrochemical consumption is increasing by about 3 to 4% per annum, whereas in India, we are increasing by almost 8 to 10% per annum.
And sir, is there also a problem in end market demand? So I understand that there is a lot of inventory in the channel, but is the end market, or are the farmers picking up the products in similar lines as last year's?
Yeah, farmers are picking up, sir, but because of this lot of inventory, that has to get consumed, no?
Yes, I understand, sir. Yeah, thanks for taking my questions. I'll come back in the queue.
Thank you. Thank you so much.
Thank you. Participants who wish to join the question queue, please press star and 1 now. The next question is from the line of Karan Shah from GC Holding. Please go ahead.
Thank you for the opportunity, sir. So just wanted to understand, where are we on the Hamirpur plant, like the products that we were planning to finalize and the chemistry we were planning to finalize? Have we processed anything further?
Sir, at Hamirpur plant, we have already planned one molecule and the plant construction is in progress there. And as informed by earlier also, that we would be commissioning this plant in the last quarter of this financial year. And we would be building them, the block-wise construction would be there. So first block would be ready by this financial year. And then like that, we are working on other molecules also. And the engineering is going on for other molecules. And first molecule, the chemistry, the plant is under erection now.
Okay. And so lastly, the 2,000 metric ton that we plan to add, which will come by FY24 end, would it be for similar category of products in which we are right now, or again new products will be introduced from there?
Here we would be introducing one intermediate, because in one product now we have backward integrated, and one intermediate we will be producing, and we would be increasing the capacity of one of our existing products.
Okay. Thank you, sir.
Thank you. Participants, in order to join the question queue, please press star and 1 now. The next question is from the line of Harsh Beria, who's an individual investor. Please go ahead.
Hello, sir. Thanks for this follow-up opportunity. My next question is about our product pipeline. So traditionally, we have been manufacturing very low price products, so something between $2 to $5 per kg. Incrementally, will we be doing these kinds of products, or do we want to increase our realizations per products as we go into newer products, as we launch newer technicals?
Sir, the pricing is no bar for us. Whatever price, because we have products ranging from $2, $3 to $100. So we have that complete range of products. The higher the price, what happens now in higher price molecules, the percentage margin slightly gets affected. That's what is our experience. And but we have a lot of molecules of the range $20, $30, $40, $50, like that we have. And new products also we are adding almost one new very small molecule which we have recently added, which we are selling at almost $120.
So, as you said, like in a higher cost products or higher realization products, we make lower percentage margins. Why is this the case? Does the customer want us to have a constant margin per kg or something like that?
Sir, what happens now when the margin, if you want to take a 20% margin on a price of $60, it will be $12. So $12, they will say it is too much. That is what the customers know, the MNCs know when they calculate the cost of the raw material and the conversion cost, and this, when they want the margin, no, the $12 they feel that you are charging too much. That's what they feel in general. But in a low value product like $5, no, then they don't question so much.
How, like, as we scale up, as we introduce newer products, how will we maintain our margins? Because like, I understand your concern or how the customers say this, but like, what do you think of the longer term? Like, can we make 20-25% margins in our newer products?
We are the what product we are manufacturing in pipeline, so we are planning 20% EBITDA for our newer product also. Currently, the situation is difficult, so we are not able to achieve for this year. Otherwise, in next year onwards, we are our EBITDA expectation is between 20% to 22%.
And so earlier, I think we used to say that we try to make products where we maintain at least gross margins of 50%. Is it possible to continue with this run rate in our newer products?
Like currently, the earlier what happened, now the margins have rationalized. Earlier supplies from China were very limited, so everybody was thinking we will be making such a high gross margin. So now we are targeting our gross margin in the range of 43 to 44% for next year.
Okay, sir. Thank you for taking my question, sir.
Thank you. Participants who wish to join the question queue, please press star and 1. The next question is from the line of Siddharth Lakhanpal from Darsh Capital. Please go ahead.
Hi, good afternoon to you. I just wanted to know, in Q1 you had inventory losses of about 17 crores, and I think I missed your opening remarks. Have you had an additional 5 crore of losses in inventory for this quarter?
Yes, sir. This quarter we have inventory loss of around 6 crore.
Okay, and how much has that brought our EBITDA margins down by?
22 crores inventory loss we have taken on the sales of 400. It is around 500 basis points. EBITDA margin has declined.
So do you foresee further inventory losses in the next quarters or H2?
Now there is very small old inventory lying with us, so we do not see any inventory loss except for 1 or 2%.
So then the EBITDA margin should come back to about 16 to 18% range for the next 2 quarters, right?
Yes.
Okay, thank you. That will be all.
Thank you. The next follow-up question is from the line of Mr. Harsh Veria. Please go ahead.
Hello, sir. My next question is about our domestic formulation business. So can you talk about the unit economics of this business? Like, what are the kind of margins which we are making in domestic formulation?
Domestic formulation, our margins are slightly lower as compared to our technicals margin. So they will be in the range of 15 to 18% EBITDA margin.
And so is it the same in export formulations as well, in line with domestic formulation, the margins?
Export, we are exporting very negligible. So export market margins are higher, but volume is quite low.
And so for our existing products, where we have good capacities, are we planning to have more registrations in potential geographies, or are these largely penetrated across geographies?
No, we are increasing our range of the registrations in the new regions also. We are expanding our portfolio as well as for the existing products, the new areas, the registration work is going on. Already going on. We are identifying. We visit a lot of exhibitions and then meet a lot of customers across the world. And we are trying to register our product in the unrepresented areas also. And the work is already going on. Even for the new products, we are generating the data. Because what happens for registration, we have to generate the data first. So the data generation is also a part of the total technology development. So that also is taken care during the plant erection. And even for the new products, we are generating all the data required and to register our products abroad.
How big is our presence in Latin America market?
Latin America, sir, we have a presence in Brazil. We have through one of 2-3 of our customers. We don't have directly our own registration because we don't have own a subsidiary company there. But we have got registrations of our products through our customers, as well as new registrations are also in development in Brazil. And we are also present in Mexico. We are present in Uruguay, Paraguay, Peru, Colombia, Cuba. And registration work is still going on for some more products there.
Okay. And so what percentage of our business is coming from Latin America?
Latin America business is, sir, almost about 8 to 10%.
So is Latin America going to be a... yes.
We know that it is a good promising area. We are working more on this. Recently, we have been to Brazil. We are trying to register ourselves there few more products.
Okay, sir. Yeah, that's all from my side. Thank you for answering my question.
Thank you.
Thank you. Participants who wish to join the question queue, please press star and 1 at this time. As there are no further questions, I would now like to hand the conference over to the management for closing comments.
Thank you very much for your participation. For any further queries or clarifications, please do get in touch with our investor relations team. Thank you. Have a nice day.
Thank you.
Thank you.
Thank you. On behalf of Choice India, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.